today we are going to say about the design thinking. Last class we have discussed about the functional accounting and design thinking. Let me discuss about that.
Now we are going to see a case study about installment system. Installment purchases. Installment system is a method of sale where the buyer gets ownership of goods immediately but pays the price in regular installment over a period of time. Features. Ownership passes immediately at the time of sale. Payments is made in equal installments. Price includes cash price plus interest. Buyer cannot return goods once purchased. If the buyer default, the seller cannot repossess goods but can take a legal action. Accounting treatment. Basic idea. Entire sale is recorded at the time of transaction. Interest is calculated and recorded separately. Buyers show assets and liabilities in use. Advantages for buyers: immediate ownership. Each payment in parts can use the assets while paying. For sellers, increases sales, earns interest income. Disadvantages for buyers: higher total cost due to interest, legal consequence of if unable to pay. For sellers, risk of bad debts, no rights to take back goods. Example, a person buys a TV for 30,000 and agrees to pay 5,000 per month for 6 months. He owns the TV immediately. Hire purchasing system. Hire purchasing is a system where the buyer gets possession of goods immediately but ownership transfers only after the last installment is paid. Features. Ownership passes only after full payment. Buyer is called hire purchaser. Seller is called hire vendor. Installment include principal plus interest, higher charges. If the buyer defaults, the seller can repossess goods.
Now I am talking about a royal level. A royal level is used to record payments made by a user lessee to the owner lessor for the right to use an assets such as mines, patents, copyrights and natural resources. Royalty is usually calculated based on output or sale. For example, per ton of coal mines or per book of sold, the agreement often includes a minimum rent which is least amount payable regardless of actual production. If the actual royalty is less than the minimum rent, the difference is called short working. Short working may be recoverable in future year if production increase as per the agreement terms. The royalty account helps in tracking expenses for the lessee and income for the lessor. Proper accounting ensures accurate calculation of payment and adjustment for short working and compliance with the agreement.
I talk about depreciation accounting. Depreciation in accounting means reducing the value of fixed asset over time due to wear and tear, usage or becoming outdated. Example, if a company buys a machine for 1 lakh, it won't stay valuable forever. Its value decreases every year. That decreases is called the depreciation. Depreciation important for the true value of asset in financial statement. Helps calculating accurate profit, matches expense with revenue. Useful for cash calculation. Common methods for depreciation. Straight line method. Same depreciation amount every year. Simple and most commonly used. Declining balanced method. Higher depreciation in early year. Less depreciation in later. Unit of production method based on usage, not time. More use, more depreciation.
I am going to explain about accounting from not-for-profit organizations. So these organizations don't exist to earn profit, but to serve for society. Example, schools, charities, educational institutions. Its main objective is to serve for society and not to earn profit. So we have used to use 3 accounts in this. So which is receipt and payment account and income and expenditure account and balance sheet. And in receipt and payment account, we used to record all receipts and payments of these organizations, and we used to calculate profit in these accounts. And in income and expenditure account, it is a kind of profit and surplus and